Yeah, good morning. Today I am discussing about forecasting of the financial statements, income statement and balance sheet of Vitex Corporation. How to forecast the balance sheet and income statement if 2008 data is given and some assumptions given. Okay, we will discuss about the how to forecast the statements. First, we need to look at the we need to take the values from the assumptions, and we have to find a model to to forecast the financial statements. So okay, first we have to find the sales. For sales there will be assumption. The assumptions, it will grow at 5% based on input from management. So for this 5% we need to arrange here forecasting factor. I already arranged the forecasting factor here. It will grow at 5% per year. So this is equal to uh, 2008 multiplied by 2008 sales multiplied by 1 plus forecasting factor, and we need to freeze it to get the if you want to drag it, then you have to freeze it. Otherwise the answer will deviate from the exact answer. Okay, 1401, and we have to drag till 2012. Okay, next, cost of sale. The assumption is 52% of sales. So the forecasting factor 52% should be kept here, and this equal to this multiplied by this forecasting factor, and we have to freeze that one, enter. Okay, and drag till 2012. And gross operating income is nothing but sales minus cost of sales. Okay, this minus this, F8 minus F9, and you have to drag till the 2012. After this we have to find selling general and administrative expenses. For this, assumption is 29% of sales based on expected worsening. So this is 29% of sales. So we have to keep the forecasting factor here, and this equal to 2008 equal to 2009 sales multiplied by the forecasting factor, and we need to freeze that one. So after getting this one, we have to drag till the 2012. Okay, after one, depreciation. And for depreciation, assumption is 8% of gross PPE. 8% of gross PPE based on analysis of, so say they given as 8% of gross PPE. So first we have to find the gross PPE. For finding gross PPE, the assumption is here: property, plant and equipment gross will grow at 11% per year. So for finding depreciation, we have to find first gross PPE. It will grow at 11% here. Okay, and gross PPE will be in balance sheet. Okay, here. So we have to keep the assumption here 11%. So because of it will grow at 11%, this equal to this multiplied by 1 plus 11%, and we need to freeze that one to get the right answer. So we have to drag this one. After getting this one, we have to find the depreciation. For depreciation, assumption is 8% of gross PPE. So 8% of the percentage of this one. Okay, depreciation will be this equal to this multiplied by 8%, and we need to freeze that one, enter. Okay, after getting this one, drag till the 2012. After getting this, next one is other net income and expenses. For getting other net income and expenses, the assumption will be other net income and expenses minus 0.7% of sales based on historical average. So the minus 0.7% here, we need to keep there. We need to keep here in forecasting factor. We need to keep in forecasting factor, and we need to take we need to multiply this by sales by minus 4.7%. This equal to 2009 sales multiplied by minus 0.7 percentage, and we need to freeze this one, enter. After getting this, drag till the end. Okay, next one is EBIT. For calculating EBIT is nothing but gross operating income minus all these expenses. So this equal to gross operating minus sum of all these expenses. We need to enter, we need to press enter, and we need to drag till the end. Afterwards, interest income will be calculated based on the cash and marketable securities, that is here, but there is no data here. So we need to arrange the data. We need to find this data first. For finding this one, we need to go to the assumption. The assumption given as cash and marketable securities 2.1% of sales. So we need to keep forecasting factor here, and this equal to this multiplied by 2.1% and put 2.1%, and then we need to freeze this one, enter, and this we need to drag that one. After this, we have to find interest income. Interest income based on, we already calculated, that is calculated based on the average balance, calculated based on the average balance and interest rate specified later. The interest rate for the cash and marketable securities is 6%. Okay, so we need to keep 6% here. So for finding interest rate income, this equal to, here we need to if income is there, we need to put negative here, because we will deduct later, so we need to keep the negative value. So minus average, we need to take average, because we have to take the average of 2008 and 2009 data. So average of these two multiplied by 6% and F4, because we have to freeze it. We got this one, and we need to drag till the end. Afterwards, interest expenses will be based on short term debt and long term debt. We need to calculate what is short term debt and what is long term debt. Here short term debt and long term debt. Okay, interest rate on short term debt is 7% based on the economic forecast. Interest rate on long term debt is remains rates embedded in existing debt. Annual expenses 13.5 million, means it is constant every year, and short term debt will be 7% based on economic forecast. Okay, but we need to calculate the what is short term debt, because short term debt is interest on short term debt will be based on the short term debt, but long term it is 13.5 million is constant, so no need to worry about this one. What is short term debt? Short term debt is used to balance the balance sheet, so it will be calculated later, because it should be calculated later to balance the balance sheet. So we have to take some assumption, otherwise take the same value here and drag till the end. Okay, afterwards we have to find this interest expenses. We already came to know that 13.5 million is constant from the long term debt, and short term debt will be average of short term 2 years short term debt, last year's and this year's, multiplied by forecasting factor, that is 8%, that is given in the assumption. So we need to freeze that one, enter. So, and we need to drag till the end. Okay, pre-tax income will be equal to EBIT minus sum of these two, interest income plus interest expenses, enter, and we need to drag till the end. Afterwards, income tax, the assumption given is 35% of pre-taxes. So this equal to pre-tax income multiplied by 35%, and we need to freeze this one, enter. Okay, afterwards drag till the here. Afterwards, net income will be equal to pre-tax income minus income taxes. Okay, drag till the end. Okay, Afterwards, dividend assumption is dividend payout ratio will be 40% based on the discussion management. Okay, so 40% keep here. This equal to this net income multiplied by 40% and freeze it and drag till the end. Next part will be continued in the second next part will be continued in the second next part will be continued in the second